Hello and namaskar. Welcome to the new session. Today, we will discuss about what are children funds and what is ICICI Child Care Plan. I am Yogita Bongia, investment coach and AssetPlus. Today, we have Mr. Prithvi Kakkar with us from ICICI Prudential AMC. He is product specialist at ICICI AMC. He has been covering alternate products like AIF, PMS, and mutual funds. He has created hundreds of data reports on capital market products and has in-depth knowledge of financial markets. So, welcome Prithvi ji to the session today.
Hi, thank you so much for having me, Yogita.
पृथ्वी जी हमें काफी क्वेश्चंस आते हैं इन्वेस्टर से पार्टनर से कि चिल्ड्रंस के लिए कोई स्पेसिफिक फंड बताइए कैन वी इन्वेस्ट फॉर आवर चिल्ड्रंस education, higher education, or for their, marriage purpose. So my first question from you would be, what are children funds and what is their investment objective?
Okay, so see, as markets has evolved into various categories and subcategories, and there are, let's say, market cap based funds like large, mid, small. There are sector based funds. There are investing style based funds like value funds or growth funds. There is also a subcategory which is known as solution oriented schemes, and in this solution oriented space, they are majorly focused on the life stages that more or less every individual goes through. So, for example, retirement as a life stage is common to most of the individuals. Similarly, having a family, having children, and then planning for their career or maybe later on in general planning for their financial aid is something that as a life stage a lot of individuals go through. So, the retirement funds or child care funds in our current discussion, child care plan, this is one of those products which fall under the solution oriented schemes category. So
Great.
usually what it does is that uh, it will basically give you a visibility on the life stages that you are having, and it gives you that comfort that all that I am now more or less, I've now more or less planned for this particular stage. So let's say if I also meet any couple who have a younger kid or they are planning kids, so I usually suggest them that let's say if you do a 30,000 rupees SIP also at a 12% growth rate, it can yield you about 15, in 15 years, it can yield you about 1.5 crores. Or if it grows by, let's say, 15%, then it can yield around 2 crores in 15 years or so. Let's say if your kid is of 1, 2, or 3 years of age.
Great. What is the investment strategy we follow and ICICI Child Care Fund Management?
So, childcare as a category, typically, the strategy is very simple. It entails that we would invest minimum 65% to 100% into equity. And then there's an additional mandate which allows the fund manager to keep from between 0 to 35% into debt instruments as well. So let's say if there are situations wherein fund manager would want to increase debt because let's say he or she is not too comfortable as per any point in time that keeping fully invested into equities, then they may choose to exercise 5, 10, up to 35% basically, putting the portfolio sum or AUM into debt instruments. So that is simply that. Besides this, then as there are, let's say, couple of childcare products in the industry, there are not a lot of childcare products in the industry, only few AMCs offer it. Our fund manager, who is Lalit, who manages this particular fund, he has a very sound understanding of business cycles. He has a very sound understanding of commodities and a macroeconomic understanding in general. So, since the funds in this particular scheme are kept for, let's say, at least 5 years or more. So the typical exit load criteria for this product is that you will have to at least keep the funds for 5 years or till the time your child attains 18 years of age, whichever is earlier. So since the fund manager has that comfort that funds are going to stay with him for a relatively longer period of time as compared to an open-ended fund, so he or she can take reasonably deeper bets also. So let's say Lalit might think, as compared to another open-ended fund that he manages, he might think that, okay, I'm going to take this X steel company share up to 2% in my open-ended fund. But I am more so confident in taking up to 5% in a close-ended fund, because I feel that this, although this might be a longer term, it might take relatively longer to unfold as a theory. But I am comfortable as a fund manager because funds here are with me for a longer period of time. So that is basically it. On top of that, there are various investing approaches also, like a top-down approach, wherein fund managers typically go from macroeconomic level to sectoral level and then stock-specific level. And there's a bottom-up approach, wherein fund managers usually go hunting at a script level. So they'll look at the company first, and then maybe sector and industry. So this fund at ICICI, at least, we have a mix of both top-down and bottom-up approach. And we will take relatively deeper bets because the fund manager is confident that he has funds for a longer period of time. And asset allocation, obviously, 0 to 35% debts. We have that mandate of keeping debt into the portfolio. So that also plays how the fund will be managed from time to time.
Great, Prithviji. So you told about asset allocation and the approach investment strategy which you follow at ICICI Child Care Fund. So would you please briefly explain the taxation also of ICICI Child Care Fund?
So taxation here is fairly simple. It will the capital gains on this particular product will be taxed more or less like an equity fund, or in fact like equity shares. So because at any given point of time, equity in this product will be at least 65% or more. So that allows the fund to qualify as an equity instrument, and then the taxation is fairly simple. If the holding period is 1 year, if you hold it for less than 1 year, you will have to pay a 20% tax on the capital gains that arise from your investments. If you have kept it for more than 1 year, then 12.5% is the standard long-term capital gains rate. And at a PAN level, you get that 1.25 lakh exemption in the overall equity that you are holding across various subcategories like mutual funds or equity at your PAN level. So that is simply the tax implications which clients will have to face out of the investments in this particular product.
Okay, so since this scheme is in existence from 2001, it has been a long time now. What are your views on the performance? Say, if we take 5 year, 10 year performance of ICICI Child Care Fund.
Sure. So, if I, let's say, take it from an inception level, the returns, it depends basically that at what particular date I'm looking at. They're usually in the range of 15-16% at a CAG, as a CAGR figure. Last 5 years is good because markets have been on an upcycle in the recent past. So, last 5 years is around 20% or more. But in general, what people should expect out of any portfolio investment in the industry is between somewhere between 12 to 15%. So whenever I am meeting a client, or in fact I'm meeting advisors and all sorts of people, I usually say that ultimately you need visibility as an investor. That if I am putting, let's say, so and so money, how much am I going to receive, let's say 15 years down the line or 20 years down the line. And for that, even if you take a 12% CAGR, that is also decent. Although in last 1 year, let's say market returns have been around 20%, 22%, depends on the index that you are looking at. But I can't take 20% as as my assumed CAGR that my SIPs or my investment is sustainably going to grow at that particular rate. We live in an economy which grows at 7% on a real basis, add 4-5% inflation to that. Some good years you will get returns like what we have received in last 1 or 2 years. But on an average, in a longer term, 12 to 15% is the standard range. Even the lesser you assume, the better it is, the better margin of safety you basically include in your calculations. So I think 12% would be a fair assumption.
Great. Thank you for the discussion. And I hope our investors have a better knowledge about what children funds are and what is ICICI Childcare Plan. Thank you so much, Prithviji, for taking time out today and explaining it to our investors. Thank you for being there.
Thank you for having us.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.